What's going on, guys? It's Ricky with TechBud Solutions. Today, Google is set to report earnings after the bell. The market is set to close in the next minute and a half. Just wanted to make sure that we can watch the market react together. I do apologize. I'm actually live streaming it because although our video, I think we got to like 700 or 800 likes, I did upload the video a little bit late, and also we had a handful of our LPP traders ask for me to go live for this earning report. So obviously, especially with how much markets are freaking out right now, I could see that, being able to watch it together and see how the market does react can be either very exciting or possibly very discouraging depending on the reaction. So I'm happy to be live. I do want to remind you, I do trade live and I work with my LPP team every morning. If you ever want to tune on in, it's the second link in the description, and we have a discount link there provided for you. The thing that I quickly want to pull up before it reports is their expectation. Why is this taking so long? Okay. All right. Earning expectation, it's expected to report today. Earning estimate is $2.64, and estimated revenue is $111 billion. Alphabet, which is the parent company of Google, is one of the Magnificent Seven companies, and it's the second most valuable company that's publicly traded. It is a company that prints money. It might not be super exciting in comparison to like Palantir or the moves that Google has it's not super trendy, but it's a money printing machine. It has a net income of $124 billion of what it actually makes in profit, and its revenue is $385 billion in revenue. That is why it sits at a pretty market cap of 400. Wait. Where am I? No. Not 400, $4 trillion in market cap. My apologies. So I'm going to pause ads because I don't want the ad to interrupt the live stream. So hopefully you guys can hear me and see me okay. And hopefully there are no interruptions during this live stream. So, all right. Here we go. Sometimes Google is a little late when it comes down to reporting earnings. I've seen it where sometimes it's 5 minutes, another time it's been 20 minutes. It looks like the market might already be reacting, so we'll see how it actually ends. The market had a really nice upswing into the close. I announced it with my LPP team. We've been watching for the market to bottom. A lot of our team has been shorting the market on that retracement. But again, just because I like to short doesn't mean that I like to encourage beginners to short. Shorting comes at a greater form of risk. So this is why today's reminder during today's live trading session was to emphasize the importance of not being afraid to take profits. And again, when there's lack of progress and a potential indication of a recovery, when in doubt, never be afraid to cash out. So we'll see how markets react. There it goes. Markets reacting in a positive way. Let's see if it holds. Dude, it's going red. Again, earnings season is not a time where, especially right now, there is a lot of fear in the market. It's not going to be super easy to tolerate this kind of volatility. It's not designed for beginners. Google's down 2.5% now. Wow. 3.2%. This is going to cause the NASDAQ market to drop. Yep, already dropping. And it will bring everything down with it. Amazon dropping. Tesla dropping. Why is AMD pushing up? What the what? 4.6% in the red. What's going on, Marco? What's going on, brother? Long time no see. Should you go long? Again, Google for me is a long-term play. It is a position that I currently hold. But again, there is enough uncertainty in the market. I would not just blindly buy the dip and expect it that next week it's going to recover. Again, we do not know if right now is the beginning of a possible reversal. I'm not saying that it is. I don't want to instill fear in you. All I'm saying is I like to be cautious, especially when other people are asking for my opinion. Again, just because I'm choosing to, I'm actually not buying any Google here. I decided to buy Google during the DeepSeek fear. Do you guys remember when it dipped to lows of like 150? That's when I bought Google. So again, me choosing to like add maybe a little bit more up here, my average purchase price is very good for myself, for my daughter, for Rachel's account. We're all, that's why like I don't like when Bitcoin investors like to encourage beginners to buy Bitcoin at $120,000 per coin. Like, bro, what are you doing, right? Bitcoin, your average price is probably like sub 20K. That's not fair for you to encourage beginners to be like your exit liquidity at 120. The same thing when it comes down to this. Do I think that Google is a really safe company and you could possibly make some money if it recovers? I mean, it's the second most valuable company that's publicly traded. It's not a company that's made out of Fugazi, right? It's not like MSTR. It's not like Bitcoin. It's a real established business. It's one of the Max 7 companies. It prints money, $124 billion in net profit. So if you like the company, if it aligns with your risk tolerance, and you see it as a dip buy opportunity, all power to you, right? But please do not buy ever just because other people are buying. Please, please, please. How much do you actually understand of MSTR? I don't think you do, to be honest. I understand that MSTR is down 70% in the past, 90 days? That's all I need to know. We called MSTR a Ponzi scheme at $500 per share. Now it being down 75%, I think that's all that matters. You can think or call it or identify it as anything you want it to be, right? Cool. Let me know how that works out for you. And there it goes, beginning to show signs of a support. Wow, impressive. What's going on with AMD, dude? Why is there so much volatility in this one? End phase. Wow, look at that. Reverse, please. Who has a long position or who bought the dip? Now, I don't want to hear about your long positions. Who bought the dip right now around the low 300s? Who took the risk? Risky play. Hopefully it's just active day traders that know how to manage and mitigate risk. Again, no one to take profits, just a reminder. It's a risky one, right? I am holding a 20K in a call, Ricky. I don't know why you guys do that, man. Doesn't that mean that it's set to expire soon? I guess it just depends on, the contract that you bought, right? I just don't get it. The exposure to risk to me maybe it's calculated gambling, but knowing that I just keep it simple with shares. I've never been into options, and maybe it's a privilege on my behalf. Like I've always just preferred to own the shares. And if direction turned against me, I can, accept the loss, but it's manageable for the most part. There's big losses that happen. But man, when I see these stories with options and stuff, I don't think it's very safe, especially for beginners. I don't think it establishes really good, healthy habits. Maybe it's just me. Covered calls on long holds are safe. Okay. . 20K call on earnings, that's straight gambling. Yeah, I mean, right, to each their own perspective. I trade options because I can't afford shares. I don't really think that that's like, maybe it's just me, but I don't think that that's a scapegoat, a valid scapegoat at least. If you're actually growing your account, then again, maybe that's a different story. But if you can see that you're not doing very well with options, and just because you have a little bit of money, what's the point of having a little bit of money if you're just going to lose it, right? You're going to turn a little bit into nothing. I would rather, maybe it's, again, when you're learning how to do something, you do it in a more calculated way, less exposure to risk. But obviously, it's less return. I see both sides. Crap, it's going up. It's trading within range. Congratulations. Hopefully, again, don't be greedy. Know that it's trading within the same kind of resistance range, 340. It had a pullback to lows of 308. When in doubt, don't be afraid to cash out. Who cares if it could run up another 4 or 5%? At least for me, it doesn't matter if you're up. Holy smokes, that was an 8% move? Wow, that's impressive. Well done. For those that actually got in on the dip and took the risk. Risky trade, but it paid off. Now it's your turn to decide whether to take profits or if you're willing to risk it for another leg up. They always beat earnings, though. That's the thing. It's what has been the theme for big tech this time around. Does anyone want to say? For a lot of these Mag 7 companies, they've all beat earnings, right? All of them, for the most part. But they still dump. Doesn't that kind of suck? Here it goes. 6.8% surprise on earnings per share, $2.82 versus expectation of revenue, 2.4%. Google is like a really well-ran company. It is. Like when you hear me talk about like blue chip companies and companies that I'm always looking for deals for, Google is definitely one of them. I don't think it's a deal right now in the short term. That's just me. That's why I felt comfortable buying it at 150. Doesn't mean that I find it a super good deal at 300, especially with markets showing more signs of uncertainty. But in the short term, sure, right? There could be upswings, and looking at previous highs, if you think the upside potential in the short term is worth the risk, all power to you. I'm no one to ever, tell you, no, it's not worth it for you. I just don't think it's worth it for me. And that's why I choose not to buy more at what I view to be elevated levels. That's all. Right? But also if it does push up to 360, I also won't benefit from that potential gain. And I'm okay with that though. Cool. There is a lot of fear headlines with not much actual evidence, but that's fearful. More money is being invested into the U.S. than other countries. Interest rates are coming down. To some degree, Kevin, there is a lot of uncertainty in the sense of headlines are one thing. Like if you speak to just the average person, average people are not thriving. There are people of like the upper middle class or the upper class. Yeah, they're still spending money. They're still traveling, all that stuff. But for those that are living paycheck to paycheck, again, from the conversations that I've had with people, what I can see, I mean, I have a few different properties and how hard it was, how easy it was to get a tenant, a few years ago versus how difficult or challenging it might be to get a tenant today. For me, I see there to be signs of a slowdown. People are not on the lower side spending as much as they once were. They're being a little bit more creative, more leveraged, more careful. To me, those are red flags. When markets are at all-time highs and there's these uncertainties, and a lot of these companies are shedding light on that lower guidance, right? We just saw it with a few of these airlines. We just saw it with a few of these retail companies shedding light that their guidance for 2026 is they expect consumer spending to be down a little bit with only one rate cut expected for 2026. Again, that's just my take. You don't have to agree with me, and I would encourage you to put your money where your mouth is, right? I think that things are a little bit elevated. There's a little uncertainty, and we can see it in just the past few days where markets are willing to sell off. And because of that, markets then begin to retrace. To me, that's enough of a red flag that it doesn't really encourage me to want to be more leveraged at these overbought levels. I'm not afraid to pick up some good deals. We were talking to my LPP team this morning, and dude, AMD sold off 17%. I bought some. I'm not afraid of deals, but like when I look at Google, maybe, and it's just me, I'm not saying that I'm right. I've missed out on many, bullish opportunities that I thought were overbought that kept pushing up higher. Let me make that very clear. I'm just explaining to you my style, and it's not that I'm right. It's just that it's my style. I'm not going to pretend like it's not right. Google, I don't find it to be a good deal at these levels. I believe that if markets do begin to retrace, this one has a lot to give back. Same thing with AMD. AMD, if markets begin to retrace, they have huge gap downs, right? But at least based off of recent downturns, I'm like, okay, well, I have a little bit to work with. If it breaks support here, I can easily cut losses. So my potential for loss, there's risk with everything, but my potential for loss, I can use a little trend line tool here. When it comes down to my long position, I took a long position today. I can manage and mitigate risk versus my potential for upside. Huge ratios in favor for the bulls. And I kind of like that, right? I'm not afraid to take advantage of risk or risk-based plays as long as the ratios make sense. I want the reward to fully outweigh, my potential gain. There's Disney. We talked about it yesterday. I bought a few shares for my kids in their investment accounts. I thought that one was quite interesting. Disney has kind of been lagging behind. I'm rotating a little bit out of big tech and focusing more maybe on these established businesses that might be a little undervalued. And what was the other one? The one that was pretty risky was PayPal. Wall Street hates PayPal. I did buy like $1,000 worth of it, which is not very much. But I bought it for my kids. In comparison to their, investment accounts, it's a small portion of it. And I thought it'd be kind of cool, right? It's still very bearish. I would not recommend buying it for any of you guys. But again, my son is 3 months and my daughter is 4. They got time, right? They got time to tolerate downturn. They're not leveraged. We don't use margin, and that's cool, right? But again, I do it with such small positions. I like buying a little bit here, buying a little bit there. I don't buy MSTR. I don't buy super speculative stocks. But guess what? Also, I'm not saying that you can't, because if one of them really does pay off, let's say I don't believe in Oklo, but let's say Oklo does end up becoming a nuclear fusion company of the future. Hey, you picked it up at $71, and maybe 10 years from now, 15 years from now, my son's going to be kicking me and be like, dude, you could have bought it at 71. It's $1,000 now. True. But it's just not my style, right? And I can't change that. Love the way that you're investing for your kids, bro. I wish I did the same earlier. Melvin, it's all the same, right? We can only start when we become aware of things. And why not start now? Also I wouldn't go heavy now, right? Markets are sitting at all-time highs. So just, how terrible would that be? It's kind of like investing in 2022. That's like when my daughter was born. The reason I was so eager to open up an account for her is because when she was born at the start of 2022, markets began to sell off. And I was like, hey, what great time to be able to buy into the dip. And that's what I decided to do for her account. It was the middle of the year that I ended up loading up, and I was like, whoa, her returns were insane within the first 6 months because of how quickly the markets began to recover. But then they went back down to retest, and then now they've fully recovered. So she has 2 different accounts. Yeah, my daughter, she'll be just fine. My son was just born 3 months ago, and markets are at all-time highs. So I've been a little bit more selective with what I choose to buy for him. I'm not afraid to take advantage of deals, but I'm also not trying to, throw spaghetti at the wall and hope it sticks. I understand the macro outlook of the market. We're elevated. I would like to wait for a pullback to really begin to pour into the accounts. When someone asks if I have PayPal, I say, no, Grandpa, do you? Again, I get it. Let me explain this. I was going to make a video about it, and I still can. Trust me, I'm not trying to convince you to invest in PayPal by any means. Like, technically speaking, it's a terribly performing stock, right? I want to show you this. And I like to reiterate it because I really want you to understand that I'm not like the crypto bros or maybe other people that you follow on YouTube. Like, I'm not trying to encourage you that you need to, I don't want you to. This is a risk that I'm willing to take, and it's such a small, like, if I was super confident behind it, I probably would have put more money behind it. What was that? Did you really give up Coke for 35 days? I gave up Coca-Cola for 21 days. It was part of my church. Coca-Cola, chips, and cussing. That's why I was so nice to MSTR bag holders for 21 days. And then finally, you guys saw my Instagram story. If you guys don't follow me on Instagram, it's the third link in the description down below. Yeah, I made up for all the lost time, to say the least. PayPal, I think my son's crying. Let me talk about it very quickly because I'm going to have to close out the live stream. We talked about Google already. Google reported earnings. That's all good. The thing that I really like about PayPal, feel free to do your own due diligence. I always encourage that. When you use Investing Pro, they give you access to these different tools. The fair value based off of a series of 32 different analysts, there's 70% upside. Okay, cool. Why do I care about that? Why do I care about other people's opinion? That's always what I say. PE ratio. It trades at a PE ratio of 7.2 times its earnings. That's incredibly low. This is a company that produces $33 billion in revenue and a net income of $5.2 billion. The net income for this company is the same as Tesla. Technically speaking, I think this company actually makes more now. Let me look it up. 3.8 billion. Tesla's 3.8 billion with a 400 PE ratio. INTC, right? All the hype between Intel right now because it's part of the Trump administration now owning 10%. I'm sorry, the United States. Negative 925 times its earnings. It's a company that produces a net income of 26 million, but like its market cap is what again? Market cap is it had like a 1,500% gain. Market cap for this one is 242 billion. So you're telling me that this company is worth $250 billion, yet it makes $26 billion in revenue. The thing that I like about PayPal is that fundamentally speaking, it is undervalued. So my thing is, if we begin to experience a potential downturn, I wonder if investors will begin to rotate out of overvalued companies and maybe invest into undervalued companies, possibly PayPal being one of them. Huge speculation. I'm like, this is a Hail Mary because Wall Street just does not like PayPal. P/E ratio is very low. And the thing that I do want to highlight is that revenue is growing. It's consistently growing company revenue quarter after quarter, year after year, but guidance just, again, was lower than what was expected. That is why I like PayPal. And PayPal is buying back their shares, $6 billion annually. Again, let me make this very clear. Technically speaking, it's a terrible performing stock, and I would respect why every single one of you wouldn't want to put money behind it because it's just not going up. And a lot of you want to make money now, and I respect that about you. And if that's the case, and if that's your intention, then correct. PayPal would not be a company that would make you money right now. At least I don't believe so. Okay? All right. Yeah, Elon Musk should buy it back. That's funny. All right. Well, my son's crying. I don't know if you guys could hear him, but I want to thank you guys for hanging out with me and watching Google as it reported earnings. For those that missed it, they beat earnings per share and revenue. As you guys saw, it originally reacted in a positive way. And once again, look, sold off or push up, sell off, recovery, now drop right back down. A lot of volatility in the market, a lot of uncertainty. Remember, uncertainty, it's not just fear, uncertainty injects fear into the market. Make sure you pay attention and learn more about the VIX index. Again, we talk about all of this and much more in our LPP lesson library. Let me make this very clear. You do not need to learn from me. You can learn everything yourself on YouTube. But if you're someone that learns best by watching other people do, and you learn best in structure, that is what LPP is designed for. It's designed for complete beginners who want an all-in-one A to Z video lesson library, but on top of that, they want to watch me trade live every single day. It's a one-time payment for lifetime access. We have members that signed up back in 2018. They paid once. They still get access to all of the updates and all the daily live trading sessions today. If you want the discount, it's linked, second link in the description down below. If not, hopefully I did enough in this video that you can consider subscribing and dropping a thumbs up. I appreciate your time. Hope that earned your thumbs up. And like always, let's make sure that we end the year on a green note. Take care, team.